Hey everyone, my name's Andy. My channel's Finding Value. If you like making money, subscribe to the channel. We talk a lot about undervalued investments. If that is something you're interested in, definitely subscribe. Join our community for this commodity boom higher. And it's a lot of commodities that we talk about. If you like this content, give me a thumbs up. Leave comments and questions below about anything that you guys have. So investing, why should we be investing? You really should care about investing. This channel will help you educate you on certain investments, certain timing, certain value over time. So I'll jump in here. This is about investing and why you should care about investing in your life. So we live, well, a lot of us, we live in countries, and I'm using the dollar in this example. This is the purchasing power of $1 over time. And as you can see from the 1600s, 1700s, it is quite a bit lower. It's down in the dirt, probably well over 99% decline in the value of the dollar. And if you try to store any wealth in the dollar for long periods of time, you're going to get hit with a lower purchasing power of those dollars. So why you should care about investing? In order to store value and not lose it to inflation, it requires someone to figure out how to store it, how to store value. As seen, you cannot store value in currency for long periods of time. They just get decimated. It will require one to speculate on businesses or speculate and invest in precious metals, invest in bonds, invest in real estate. Oh man, it's a lot to worry about. What should we do? So here's my opinion. So over the long term, large stocks return about 10% per year and about 5.5% in government bonds. But that's the long term. And right now we are entering a period where stocks and bonds, I think, are overvalued in comparison to history. Expect lower returns or negative returns in some of these areas. I don't think bonds will do all that well. Given value commodities and precious metals, they're good stores of value, and I think they're extremely good value at this time. So I think someone should be looking at precious metals and commodities, given where the valuations are in terms of stocks versus commodities. And I also think, given where the money supply is and how large the money supply is in relationship to the price of precious metals. So just to go over some charts here, this is the commodity index to S&P 500 ratio. It is extremely cheap for commodities in relationship to history, signaling that commodities are a better buy than stocks. This is the Dow to GDP ratio. This is signaling that the Dow has never been this expensive in relationship to the GDP all the way back to the 1940s. So we are in bubble territory for the Dow. Now I've got the gold and Dow Jones here. Gold is favorable during this era. Dow's favorable in this area in the green. And then gold is favorable in this area here. And then the Dow's been favorable ever since. And I think that's about to rotate back to a gold era where gold will outperform the Dow. And when you price these things in a ratio, the Dow to gold ratio, it'll look something like this. The Dow is outperforming gold at the moment, but we have this big uptrend line. It broke the big uptrend line on a short-term basis. We did pop up above this downtrend line. So we do have short-term Dow strength over gold. It may last a little bit longer, but I don't think it's going to last forever. I think it may last for 6 months, year, 2 years, 3 months. I don't know, but that's why we monitor it, and that's why we watch it. We've got real estate. I was talking about real estate as being a store of value, that a lot of wealthy people store a lot of their value in real estate. The median house price has gone up quite well. If you can time it where you're buying it down here and you're just holding it, it does extremely well. So real estate is a good store of wealth over time. Now, I'm going to show you something here. I'm going to get out of this. And this is the housing starts versus gold price. And what I did is I put the housing starts about where it started right in here, and it's increasing. So this box is where the housing starts, if you were to look at history, increased. I did the box from the start of the box here to the end. So this is where it was increasing in housing starts here. I gave it a little bit less here, and this is the increase here. So check this out. I'm going to put these start and top. So this is the bottom of the housing starts to the top of the housing starts. I'm going to move this box without changing its length over the gold price to show you how this aligns. So what I am saying here is that the housing starts predict when gold prices go up and also predict the duration of it. So watch this. I'm going to move this guy. So not this. I'm going to grab this one. I'm going to move it over to the top of that right there. Notice how the duration of this housing start is the same as this going up. I'm going to watch this. Check this out. I move it over to the beginning of this. Right, it's about right here because it starts right there and it moved all the way up and peaked right at the top of this duration here. I'm going to do one last one here. Check this out. So you can see this is about where it starts. This is where it ends, where it goes into an expansion phase a little over, it's about 1200-ish into an expansion phase of real estate. I put it to the top, to the peak here, roughly, right there. So that's the peak. And look where it goes, right from the start. So this duration in an expansion phase predicts roughly where and how long the duration of this gold bull market is. So I just kind of did that for the heck of it. And it's offset by a couple of years. So I think we're coming up on a bull market for gold. We're just a little bit away from it, from a big bull market. I just wanted to show you guys that. This is the housing starts, and this is what we have. We're coming up above that 1200. This is when gold really starts to get moving. It'll be delayed just a teeny bit, and I think we're going to start moving quite large very soon. Exact timing, I don't know. But overall, big picture, big picture look at things. It's going to go up if the housing starts continue to move higher. These things are pretty volatile if you look. I mean, they can move up and down quite a bit until you see a very nice big break to the downside, signaling that this is broken. But right now, it's not broken. We're moving up, and it's looking good. This is the COVID sell-off here. So it came down and then bounced right back up when the economy opened back up. And these are the new private housing unit building permits, and you can see that the building permits are going way higher than the 1,500 or 1,500 million, 1.5 million units. That's the average demand per year, and it is above that, meaning that we're in an expansion phase of real estate. So the conclusion here is, given market data, I think precious metals, commodities are a good spot to be along with real estate. In order to preserve purchasing power value, one must speculate. And if I was going to speculate, if I were to do that now, I think precious metals and commodities are the spot to be because of valuations that we just saw, because of the real estate cycle of where we're at, which spurs money rotation. And I think real estate itself is also a good spot to be if you guys like real estate. I think prices are going to continue to go higher because of the housing market shortfall that we have, roughly 4 million homes short. And I think it's a structural deficit that will eventually have to be made up. If the moratoria ends, it could have some short-term pain, but I don't think we're still going to have to build those homes irrespective of whatever pain we get short-term when that ends, or however they're going to deal with it. They're going to have to build it at some point. So that's my take on it. If you guys like this content, give me a thumbs up, leave comments or questions below. Subscribe if you haven't subscribed, and thank you for listening. This is Finding Value.